Joining me now, the economist and Reuters columnist Anatole Kaletsky and Professor Mariana Mazzucato from Sussex University. Welcome to you both. Was this the right move, Anatole?
No, I think actually it was the wrong move. Most economists believe that the Chancellor was making a big mistake 6 months ago when he created the Help to Buy scheme. I was one of the few who said at the time, this is the one thing that the government has done that could actually turn the economy around. And it did turn the economy around. I think the reason why the UK economy has been surprising most experts on the upside, has been doing better than any other European economy now for the first time in 5 years, is the revival of the housing market.
So you should have just let this one run?
No, I think this is the kind of action the Bank of England will probably have to take and should take 2 or 3 years from now, once the economy is recovered and once we are back to a normal economic situation with unemployment back to 6% and so on. But I think it's too early to do it, and it does endanger the recovery.
So he shot his goose a bit too soon.
Well, I think that he's right for 2 reasons and he's wrong for 2 reasons. I think he's right because what he's basically saying is that we don't want to fiddle with the economy through the interest rate by increasing it in terms of, stopping this overheating, because actually we still have very low private business investment. So he, reintroduces this concept of regulation. So he wants to increase leverage ratios and he wants to change the type of lending. We don't want to lend to the speculative economy, so to give mortgages out to consumers who actually probably won't be able to pay back those mortgages, especially once interest rates do start changing. But I think he's wrong in the sense that basically what we're trying to do, and I think anyone who's thinking about growth, is how to rebalance the economy away from a speculative finance, if you want, towards productive finance. And I think this emphasis that somehow it's going to happen by lending to SMEs, where, if you look around the world and including the UK, SMEs actually don't produce that much sort of net job creation, innovation,
so there is a chance that the growth from a housing bubble will be better than what comes next, which could be no growth from a housing bubble.
The main point, though, is that the problem right now in the world, but definitely in the UK, is not the quantity of finance. There's plenty of finance out there. There's not the right quality. What we need is long-term, patient, committed finance that actually helps the types of companies that do want to invest in these long-run growth areas to actually be able to do that. And it's independent of size. There's small, there's medium and large companies that need that. But none of these reforms are actually increasing this long-term, committed, patient finance. He's still trying to go through the banks, just like Vince Cable with his business bank was still going to go through the private banks, whereas in places like Germany, but even in the US, where they have huge public funding agencies, there's direct lending to companies.
I mean, Anatole, you said you were directly at odds with a lot of economists. Essentially, all these homeowner lending schemes have been politically popular, but economically slightly crazy, haven't they?
Well, I don't think it has been crazy. I think this is a case of a measure which I think was initiated for political and, if you like, quite cynical and manipulative reasons. It was all about winning the next election, but it happened to be the right thing to do for the economy at the time because, at the beginning of this year, the economy was in its deepest and longest slump in history, and there was no prospect of turning that round.
But
and this actually began to turn things round.
But where does the dynamic sit now between the Bank of England and the Treasury? Because who clamped down on this exactly?
I think that's a great question because my assumption now, of course, as an outsider, was that when George Osborne introduced the Help to Buy program, it was more or less the same time that he announced Mark Carney as the next governor of the Bank of England. So my assumption, I think most people's, was that he must have consulted the new governor to ensure that he would be supportive of this program. And that's exactly how things seemed for the for the first 3 or 4 months with Mark Carney at the Bank of England. But he suddenly and quite inexplicably seems to have changed his position. And to me, I was thinking about this is a bit like Thomas à Becket and Henry II. If Mervyn King had still been in charge, it would have been very hard to introduce the Help to Buy program.
And do you think Help to Buy is now similarly under the microscope?
I just don't think that that's where the problem is. And I mean, I think, just going back to your previous question, I mean, the real schizophrenia is in the Treasury. And I do actually have quite a bit of faith in Carney. I think he has read Keynes, and Keynes's main point is that what drives private business investment are these animal spirits, right? Your gut instincts about where the future technological and market opportunities are. And little fiddling with the interest rate actually doesn't really change that. So he's trying to think, how can we, again, rebalance away from speculative finance towards productive finance to actually eventually increase that private business investment. And I think the problem in the Treasury is there's no proper theory of economic growth. This is why, by the way, even the industrial policy and the innovation policy, which is finally back that BIS, the Business Innovation and Skills Department, is trying to do, is actually having very little effect because it's not embedded and coherent with what the Treasury is saying. And I don't really actually think the Treasury has a theory of economic growth.
But I think what you're missing, Mariana, is that businesses are not going to invest unless they see consumer demand. What generates animal spirits is the knowledge that people out there are going to buy your products and services. And that is how a housing recovery was beginning and is beginning to feed into the broader growth of the economy.
I think housing recovery is like, again, one thing that Keynes didn't get right was, he said that digging ditches and filling them up again is somehow going to cause economic recovery. That's kind of like this housing point. Just build a bunch of houses.
Presumably, when you take away the ability for all those people to be able to get a mortgage from lending, and you've got all this QE floating in at the other end, the gap between those at the top and those who are not able is even bigger. That's what this is doing, isn't it?
Well, yes. I mean, inequality was both a cause and an effect of the financial crisis. There was too many people taking out these, not only bad loans, even good loans in the U.S. that just didn't have the income. I mean, real incomes have been stagnant for 30 years.
But again, the Help to Buy was beginning to redress that, and we're just getting to the point where it's beginning to move out from London to the other parts of the country where actually houses are not expensive. The average house price in this country is £170,000.
We've got to leave it there, but thank you both very much indeed.